Welcome back everyone to the Audacious Witch channel, where we talk about the magic behind the stock market. Oh my goodness, boys, stop scrolling. Seriously, what if I told you that the legendary Warren Buffett just gave us the ultimate cheat code for the next decade? He quietly sold off some Apple.
I know it's hard out there.
To buy a ton of Google. Now, why does that matter? Because it confirms one thing. AI is the trade he's finally focused on. But here's the kicker. I found the secret stock that's going to power the entire boom. It's the one stock that all the big tech giants, Google, Amazon, Meta, have to pay just to turn on their AI data centers. Plus, Michael Burry, the big short guy, just shorted Nvidia. Is he right? Or is this the perfect entry point for the biggest generational trade of our entire lives? Why Nvidia is not running out of steam? Does China's revenue matter for Nvidia? How does the world's most valuable company continue to grow? Are we really in an AI bubble?
Finding me was one of the best things that's ever happened to you.
This is the 10-year lock-in trade, and you can buy it right now. Let's dive in. Today, we're unpacking a massive opportunity. Buffett selling Apple for Google wasn't an accident.
Why did you keep coming back to my clips? So good, the things that she say just resonate with me.
Google is all in on AI. It's a signal, not a noise. We need to go past the obvious and look at the whole ecosystem. I'm focusing on 3 stocks today, 2 pure play AI heavy hitters, Nvidia and ARM Holdings, and one incredible under the radar infrastructure powerhouse, Entergy Corporation. Before we get into my complete 3 stock analysis, and please hit that like button and subscribe. It really helps me bring you content like this. Let's make some money together. Number 1 stock, Nvidia, the engine of AI. Let's start with the king, Nvidia. Right now, it's a $4.6 trillion. Apple is traded for $4 trillion. It has no AI, and even Buffett thinks Apple is overpriced. Nvidia is the real deal. They're the literal engine of AI, but with a market cap over $4.5 trillion, the question is the easy money gone? After being crowned the world's most valuable company, it's natural to wonder if the easy money has already been made. For investors, the debate comes down to whether Nvidia can keep outpacing both the Nasdaq and its semiconductor peers, given its phenomenal run.
I must be Mummy's good boy. I will never disobey. I am Mummy's good boy.
The valuation myth, the biggest hang-up for investors and short sellers is valuation. To put this into perspective, on a forward PE basis, Nvidia was actually more expensive at the start of 2023 than it is today. It's trading at a forward PE of about 33 compared to 62 back then. The growth is catching up to the valuation. Why $10 trillion is possible regardless of the market fluctuations. Nvidia's product roadmap is not slowing down. Nvidia is on the eve of releasing its next generation of GPUs, combined with its enviable software platform CUDA. And due to being an AI systems company that provides components well beyond GPUs, including networking and software platforms, NVIDIA 1.0 was defined by the company's lead in gaming, whereas NVIDIA 2.0 was defined by the introduction of Tensor cores with Volta. These cores evolved through the Hopper generation, ultimately leading to the Transformer engine.
Wow, I love this car! And
more precision support for accelerating AI compute. The market eventually caught on to the enormity of the AI market as Hopper facilitated more accurate Gen AI applications coming to market. Nvidia will reach a $10 trillion market cap by 2030. I want to make it abundantly clear that from a technological standpoint, Nvidia has run circles around the FANGs over the past 8 years. Apple has sat stagnant while Nvidia is in its Steve Jobs era. What has resulted is that Nvidia is no longer a GPU company, it's an AI systems company. The best 10 or 15 minutes an investor can spend in today's market is understanding what exactly Nvidia accomplished to get to $5 trillion, and otherwise it will not be clear how we can get to $10 trillion.
I think it's incredibly overpriced.
I need it. Buy it, store it.
And I'm so proud of you. Yeah.
The NVIDIA 3.0 roadmap NVIDIA is on the eve of releasing its next generation of Rubin GPUs, and its real impenetrable moat is not the chip. It's the CUDA software platform, and being an AI systems company, this is augmented by the back-to-back release of Blackwell and Blackwell Ultra. If we look at the revenue potential for quarterly data center revenue, once Blackwell and Blackwell Ultra ship in volume, this leads us to a $6 trillion valuation by next year. The AI networking secret, the inevitable trend, this is the part Michael Burry is missing. Under the hood, the biggest opportunity is AI networking. When you move to 72 GPUs, your networking shifts entirely. This is why NVIDIA's AI networking NVLink Spectrum X is seeing massive growth. This is a 5x to 9x opportunity that is already beginning to take shape. Hyperscalers are planning to deploy 1 million GPU clusters by 2027 to 2028. The $800 billion revenue trajectory. AMD's CEO Lisa Su estimates the AI accelerator market will reach $400 billion by 2027, with NVIDIA's over 80% market shares. That's $320 billion for their data center segment. If they maintain a 40% CAGR, it's not out of the question that NVIDIA ends the decade with $800 billion from AI systems. Michael Burry short and the perfect entry. Okay, let's talk drama. Burry has shorted Nvidia. He claims big tech is using accounting trickery by changing depreciation schedules. Here's why he's wrong, boys. The old hardware, the A100s, is not obsolete. It's still in wide use. These depreciation changes are justifiable because the equipment lasts longer. His worry is creating a dip in fear in the market, which is exactly what we want.
I'm so glad you're here.
Yes, there are risks with China export bans and the general bubble talk, but the underlying spending boom is real. AMD CEO even said customers are accelerating their spending, not leveling off.
What happened? Worst things have happened. I think we're going to be fine.
This isn't just a trade, it's the foundation. We're buying before earnings next week to capture the up to 30% jump experts are predicting. Stock number 2, ARM Holdings. The efficiency play, the buy the dip. Now for a pure play AI heavy hitter that's currently on a dip. ARM Holdings, remember, Nvidia tried to buy them for $40 billion back in 2020. Since then, Nvidia's value has gone up 10x. ARM's value is up less than 4x. Why ARM is undervalued relative to Nvidia. They are a pure play on AI because their architecture is ridiculously energy efficient, crucial for data centers, automotive, and smartphones. They have high cash reserves and near 100% gross margins. The market got a little twitchy and the stock is down, but that's what we call a buy the dip opportunity. They are the infrastructure beneath the AI wave, the quiet force ensuring everything can run efficiently. The bubble talk is overdone, but it's gifting us a discount. Stock number 3. Entergy, the secret power stock, the dividend. Okay, now for the real secret. This is what connects Buffett's AI focus and the massive capital spending. This is the energy company that's going to power the $1.4 trillion in AI infrastructure spending planned over the next 8 years. Meet Entergy Corporation. Why Entergy is the secret weapon. They're an electric utility, so they have guaranteed, regulated customers. But now they're becoming an essential infrastructure provider to the biggest tech companies in the world. They just signed all 3 of the hyperscalers, Meta, Amazon, and Google. 3 reasons ETR is the 10-year lock-in. Nuclear exposure. They own and operate multiple nuclear plants. Nuclear is the cleanest, most reliable, and most scalable power source for 24/7 AI data centers. Diverse generation. They use nuclear, natural gas, and combustion turbines, meaning they can meet the massive, diverse, and clean energy demanding needs of data centers.
My mommy is so beautiful. My mommy is the best. My mommy deserves it all. I am mommy's good boy, and I'm never getting away.
Prime location. Their service area is along the Gulf Coast, a major hub for energy and now increasingly data centers. The pick and shovel play. This stock isn't going to have 100% growth next year like Nvidia, but it's a secure, long-term dividend-paying way to invest in the AI boom without the high volatility. They are the pick and shovel play on the AI power grid. The biggest risk to AI isn't the chips, it's the sheer amount of power needed. ETR is getting paid by the trillion-dollar companies to solve that problem. And let me know in the comments, have you heard of ETR before? Let's see who's already on the secret trade. So what's the move, besties? We're building a diversified AI-focused portfolio that hedges against Burry's skepticism and capitalizes on Buffett's signal.
And you're gonna keep coming back for more and more and more.
Number 1. The growth play, Nvidia. Buy before earnings for the short-term pop. Hold for the $10 trillion future. Number 2, ARM Holdings. Buy the dip on energy-efficient architecture. Number 3, Entergy. The secure, dividend-paying anchor solving the trillion-dollar power problem. The core takeaway, listen up. If you took one thing away from this video, it should be this. The AI boom is bigger than all of us. It's about the power to run them. If you believe in the multi-year, multi-trillion-dollar spending trend on AI, you need to own the hardware and the power. The tech sector's earnings estimates are still rising twice as fast as the S&P 500. The bull market theme is AI, and leaders tend to endure. Once a winner, always a winner. What stock are you excited about? Drop a comment below and let's talk. Give this video a like if you're ready to make a fortune on the AI energy stock.
Feels so good to be my good boy.
And subscribe so you don't miss my next secret stock. Thanks for hanging out with your favorite investor. See you next time.